Module 7, Infrastructure, Governance, and Institutional Frameworks. 1. Understanding governance in infrastructure development. Governance in infrastructure involves decision-making processes, accountability mechanisms, and strategic oversight, policy coherence, alignment of infrastructure initiatives with national development plans, fiscal policies, and social priorities, transparency, open procurement processes, public disclosure of budgets, and monitoring to reduce corruption, stakeholder engagement, inclusion of civil society, local communities, private sector, and international partners in planning and execution, performance monitoring, systematic tracking of project outcomes, cost efficiency, and quality standards. Poor governance undermines the transformative potential of infrastructure, leading to wasted resources and underperforming assets. 2. Institutional frameworks for infrastructure. Infrastructure projects require robust institutional frameworks to coordinate multiple actors, ministries of infrastructure/public works, policy formulation, project prioritization, and oversight. Regulatory agencies ensure compliance with safety, environmental, and quality standards, e.g., energy regulators, transport authorities. Project management units, PMUs, technical and operational coordination of large-scale projects, financial institutions, banks, development finance institutions, and public-private partnerships that manage investment flows. Anti-corruption agencies, institutions tasked with monitoring, auditing, and ensuring accountability in procurement and contract management. A strong institutional ecosystem facilitates predictability, efficiency, and investor confidence in infrastructure projects. 3. Legal and regulatory frameworks. Public procurement laws ensure competitive bidding, fairness, and transparency. Environmental regulations enforce environmental impact assessments, EIAs, and sustainable practices. Land acquisition laws enable equitable acquisition of land for infrastructure without social unrest. Concession and PPP agreements define the responsibilities, risk sharing, and legal remedies for private and public stakeholders. Countries with clear, consistent, and enforceable legal frameworks attract long-term private investment and reduce project risks. 4. Political economy and infrastructure. Political factors significantly influence infrastructure outcomes. Policy continuity, political instability, or frequent policy changes can halt or delay projects. Rent-seeking and patronage. Politicians may prioritize politically advantageous projects rather than those with the highest developmental impact. Decentralization. Local governments may have authority over infrastructure planning, leading to either efficient local solutions or fragmented planning. Citizen participation. Strong democratic institutions allow public oversight and reduce corruption risks. A nuanced understanding of political economy is critical for designing resilient governance systems in infrastructure development. 5. Governance challenges in infrastructure: corruption, misappropriation of funds, kickbacks, and collusion in procurement. Institutional fragmentation. Multiple agencies with overlapping responsibilities can cause inefficiencies. Capacity constraints. Shortage of skilled project managers, engineers, and policy analysts. Information asymmetry. Lack of data on project costs, impact, and timelines reduces accountability. Regulatory gaps. Weak enforcement of quality, environmental, or safety standards undermines sustainability. Addressing these challenges requires a combination of legal reforms, capacity building, and digital governance tools. 6. Digital governance and smart infrastructure. E-procurement platforms reduce corruption and improve transparency in contract awarding. Project management software enhances planning, monitoring, and reporting. GIS and remote sensing helps with site selection, monitoring, and disaster preparedness. Blockchain applications ensure immutable records of contracts, payments, and supply chains. Digital governance tools improve efficiency, reduce leakages, and provide real-time accountability. 7. Global best practices. Singapore, centralized agencies with strong legal and institutional capacity ensure highly efficient infrastructure. South Korea, transparent procurement and performance-based contracts foster sustainable infrastructure development. Germany, strict regulatory oversight, environmental compliance, and citizen engagement ensure long-term infrastructure quality. Rwanda, integration of ICT into governance structures promotes efficient monitoring of public works and urban planning. These examples demonstrate that strong governance frameworks correlate with infrastructure quality and economic impact. 8. Policy recommendations. Strengthen institutional capacity for planning, implementation, and monitoring. Establish independent regulatory bodies to oversee PPPs and major projects. Enhance transparency through digital governance platforms and e-procurement. Build capacity in anti-corruption agencies and audit institutions. Foster citizen participation in monitoring infrastructure projects. Ensure policy continuity across election cycles for long-term infrastructure projects. Adopt international best practices tailored to local contexts.